best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. It's Kerry Lutz, and what can we say? He's a legend. Ned Schmidt is with us. You know his online publications well, the Value View Gold Report and the Agri-Food Value View. And Ned, what can you say about what's going on with precious metals? Is this the last gasp? Is it all blue skies from here? What can we expect?
Well, it may be the last gasp for the short sellers on the street, but the metals have been part of this dollar mania that's been going on the street for 6 months or so. It was kicked off by Putin's invasion of the Ukraine. The dollar started to rally versus the European currencies, and the street momentum traders jumped on this dollar bandwagon and have been selling currencies unbelievable fashion. I mean, the Australian dollar must be headed to zero. The Canadian dollar hasn't had an upside in some time. And gold and silver are part of that dollar rally. And it is approaching the last hurrah for the dollar. The dollar's value is the equivalent of 5,000 on the NASDAQ back 13 years ago, or 14 years ago, I guess now. Silver has been part of that buy the dollar, sell currencies routine, and it's been made worse by an old habit in the futures markets of running the stops. They could see that at $19 that silver, they could get it through 19, it was going to 17 and a half or whatever it went to. Mm-hmm. And they were successful in running the stops. And now what we have in silver is one of the most dangerous chart formations on the upside is a rising parabolic curve. That's where the rate of increase accelerates, which is unnatural. And if we throw a ball up in the air, the momentum slows and it finally falls to the ground. Well, in silver, we've got an inverted parabolic curve. The rate of descent is accelerated as if they think it's going to zero. That formation is always reversed with a vengeance. And so it's setting itself up for a reversal. And if you look at what's going on in the marketplace, you can see that developing because the street has one of its largest short positions in history in silver. And at some point, they've got to reverse it. On the other side, you look at investor demand. I mean, the size in terms of ounces in the silver ETFs, collectively, all of them, is at a record high. So we've got investors buying the cash market, and we've got the street shorting the futures market, and at some point the futures have to cover. I mean, nobody has to take their silver out of their vault or their safe deposit box, but if the street's short, eventually they will cover. And we can see a very strong rise off this low between now and the end of the year.
Mm-hmm. So you think it's building up the pressure and they can only keep it down for so long?
That's right. And it's a compressed spring. And, they're seeing so much of their other stuff come apart right now. I mean, we're talking on Thursday afternoon. The stock market's being killed. And part of their reasoning was that the U.S. stock market was going to be so strong, there was just going to be a raft of international money flowing into the U.S. stock market. Well, that's not happening. And with what's going on in Asia, I mean, next week I believe, is when the new gold exchange starts trading in China. And that could be part of the weakness that we're seeing in gold. People waiting to do their trades in China rather than waiting to go ahead and doing them here. The other thing that's going on is next month we start a two-way trading between Hong Kong and Shanghai on Chinese stocks. And that's going to move a lot of money out of the Western stock markets into the Chinese stock markets, just like we saw with Alibaba. I mean, that's just the beginning of the money flowing into Chinese stocks. So money is going to flow out of the dollar into the Chinese yuan. And one of the mistakes people make is looking at this dollar index that's so popular. I mean, my view is it's worthless. I mean, it's 75% in European currencies. I mean, who cares what the Swedish krona is trading for? I mean, they haven't traded the Swedish krona since the euro was introduced. And so, and the dollar index has no Chinese yuan in it. And the yuan, the high was in December at about 6.04, and it's about 6.14 now. So it's ignoring that the Chinese yuan has been extremely strong relative to the dollar. So at some point, like I said, this is NASDAQ at 5,000. The whole house of cards is going to come apart.
Mm-hmm. So there's a lot of changes brewing in the East that bode well for gold and silver then.
Correct. And that's the way the world's turning. I mean, Alibaba was a signal, a bright red signal that the world is turning toward the Chinese investments. And that's been a hot IPO area. They've had in the last few months several hundred IPOs, because they had turned off the IPOs for about a year and redid all the rules, and now the IPOs are coming hot and heavy. And one of the interesting things is about Alibaba is one of the reasons they listed in New York is because they could not list in Hong Kong. They wanted to list in Hong Kong, but they couldn't because they broke the rules. I mean, the ownership rules on Alibaba are so bad that Hong Kong wouldn't accept them for a listing.
Yeah, you got to wonder about these Chinese stocks, Ned. I mean, the accounting that they, what passes for accounting in China, not very trustworthy at times.
Well, the U.S. still holds the world championship in accounting fraud. I mean,
yeah, well,
Enron, Tyco, come on, WorldCom, Qualcomm, you know. It's going to take China a long time to break our record. And in China, the accounting issues are really skill level issues rather than most of them being fraud. There's always accounting fraud in every country. Mm-hmm. But in China, the issue really gets down to skill levels of the accountants. Remember, they've only joined the modern business world in the last 20 years. Well, we've been manipulating accounting for centuries. The other thing that's going on is the Chinese government has tightened up the rules for IPOs. None of this, the accounting is better, and likewise in Hong Kong, the rules in Hong Kong are fairly strict. Yeah. Hong Kong may have the strictest listing requirements of anybody, and Singapore is stronger. So, but anyhow, what it all means, though, is money is going to flow east. I mean, because you have such growth potential, you have companies making real money. I mean, some Chinese companies actually do make money, where most of the favorites in the United States, they don't make any money if you actually accounted for everything. So.
Yeah.
So as we go, let me go one more second on that.
Sure.
What that means is, I quoted an article out of I can't say it properly. It's CAIXAN, which is a publication, comes out of China. The guy wrote that if the 20th century was denominated in dollars, the 21st century is going to be denominated in yuan and dollars.
Mm-hmm.
But investors are going to move to the yuan. The world is moving to the yuan. But nobody's going to trust any government, particularly the Chinese government, immediately. So what it means is the world is going to see wealth transfer to the east, where that wealth will then be divided between the yuan and gold. No one is going to keep all their billions just in Chinese yuan or dollars. They're going to split it. So we're actually going to denominate the 21st century in three currencies: the dollar, yuan, and gold.
Mm-hmm. Yeah, maybe Bitcoin too, huh?
I don't comment on Bitcoin. I don't like getting all the nasty emails.
You never know. We got to have something.
Well, you got to have something to play with. I mean, for me, I'd rather buy baseball cards.
Yeah, well,
I'll get some emails.
A little hard to trade with baseball cards, but hey,
I haven't found a grocery store yet that takes Bitcoin.
It's coming. It's coming. PayPal takes it. eBay will be taking it, and that's the trend. But hey, we'll be talking about agricultural commodities, why the price of hamburger is so high, and how to get a discount Big Mac. Up next on the Financial Survival Network.
FSN Radio. It's all about what's next.
Worried about the coming dollar collapse? Then you need to speak to Tom Cloud today about buying gold and silver. It's the key to protecting your wealth from a declining dollar. Call him now at 800-247-2812. Tom will help you find the exact right bullion products to keep you safe. Would you believe that Tom's been in the business for 38 years? Tom understands these markets better than just about anybody. He's seen bull markets and he's seen bear markets, and he's not worried, and you shouldn't be either. When it comes to uncertain times like these, there's only one place to turn, and that's gold and silver. And Tom's offering all FSN listeners free shipping and insurance. So call Tom now at 800-247-2812. That's 800-247-2812, or visit cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
Hey, in case you just joined us, we're talking with Ned Schmidt. You know his internet publications quite well. And we talked about gold and silver, where they're heading. It's obvious. Ned covers them quite well in his Value View Gold Report. But now on to what the Agri-Food Value View publication covers. Ned, like you said, corn and wheat, especially corn, though, bumper crop, and prices are plunging, just like you predicted months and months ago.
Yeah, and it's unfortunately, since you mentioned beef a minute ago, it's not flowing through to the consumers, because ground beef is $4 a pound on average. And it's important to understand that most commodity prices are not going down. Beef prices are going to be higher at year end. I mean, the first chance we've got of better beef prices is in the second quarter of next year. There just isn't any. I mean, I was at Walmart yesterday, and they had a security guard at the beef department.
For real?
No, I'm kidding. But to that point.
So just about.
The meat sector, you're going to see paying up. In corn, what we've got is the word bumper crop doesn't describe how good it is this year in the United States. I mean, it's massive. It's like bowling 2 300-point games back to back. It's just incredible how much is coming. The problem we got is we need to look forward to next year. What happens in 2015? If 2015's crop is smaller by a significant amount, we're going to need that excess corn that we produced this year. I mean, it's eaten. It doesn't stay in a silo forever. And so what's really important is what happens next year. And right now, we're spot corn prices in central Illinois about $3, $3.05 for spot corn.
Yeah.
15% of our farmers in the United States cannot put a corn seed in the ground and make a profit. Corn farms, on average, next year, if prices stay where they're at today, will lose money. And our listeners have to understand a corn farmer is not like a technology company. Corn farmers have to make a profit. So what we're going to see next year is the biggest drop in corn production we've ever seen without a weather event. We're going to see U.S. corn production down 10 to 15% next year. And so this is the good news this year that translates into not so good news next year. Soybean farms, at today's prices for soybeans, a soybean farm loses money. They still make money on the soybeans, growing them, but when you start paying all their fixed overhead costs, they lose money. That's intolerable. That can't go on. And the U.S. is not the rest of the world. If we take the U.S. out of the picture and we just look at non-U.S., the whole entire rest of the world, it consumes every year more grains than it produces. And so the rest of the world still has to turn to the United States for corn and soybeans and wheat. And the world production outside the United States is going to be down this year, and it's going to be down again next year. And so this whole situation is temporary. There's no rule in ag commodities. Low prices could create high prices, and high prices could create low prices. So we're going to see a reversal of things next year. And part of what's driven this commodities down is this mindset that exists in the investment world that you just keep pushing things whatever direction they're going. In other words, there's no price too high to pay for apples. We'll find out this week there is. There's no price too low to sell silver or corn or beans. And so this attitude on the street where we just push prices in whatever direction they're going till they bust, whether it's bust to the top or bust to the bottom, it is what's doing it. And what they don't understand is that is distorting economic activity. The price of corn in the futures pit has real world impacts. And we're going to see perhaps something we've never seen before happen next year in the U.S. grain market.
Yeah, and you've been calling this for quite a while, but I don't even think you realized how big this crop was going to be.
Correct.
So we're not going to see any relief for beef prices till middle of next year, huh?
Right. That's the earliest it could get here. Because remember where we are in the calendar. We're almost October.
Yeah.
There ain't many little calves being born this month. And we have so scripted feeder cattle
Yeah.
from the United States. There's just not any there. And I don't care how high the price of ground beef goes, it still takes 9 months for a cow to have a calf. I mean, it doesn't change that. We can't go to the factory and just produce a few more calves.
No 3D printing calves, huh?
You know, that's right. I hadn't thought about 3D printing of calves, but I don't know if I'd buy that stock.
No. Yeah, it's obviously got to rebuild the herds, and takes time.
There's the old joke, what has become the old joke, that in Nebraska they're selling $20 bills for $25 at the cattle auction. So it's kind of, it was a time when somebody was a cattle buyer. See, we're looking at the people that are buying young, small animals and going to feed them and sell them to the packing house. Where they really did their pencil work as they were bidding. Well, now it's just whatever's available. You got to have a calf if you're going to have a steer to butcher. And you've got so few of them now. Cargill, a few months ago, closed another plant. Canada, this shortage is in Canada too. And they closed a big packing house in Canada this fall. And, when you shut down a food processing factory, plant, whatever you want to call it, you just don't go back and turn the lights on and start producing. I mean, first of all, it has to be brought back up to health standards. Then you got to go find trained workers. And we're just not producing a lot of butchers anymore.
No, nobody. They'd rather go trade stocks and, trade derivatives than wear a, Yeah,
they're not going to learn a profession. They're just going to buy a computer and a software package, and MacD is going to make them rich.
Exactly. Well, on that note, we got to get going. Ned, just tell us where to find your newsletters.
Yeah, I have two sites. One is ValueViewGoldReport.com, and the ag information is at AgriFoodValueView.com. Right. As always, it's been great to talk to you again today.
Hey, you too. And you can find those links in the show notes to this interview on FinancialSurvivalNetwork.com. Sign up for our free newsletter. And if you missed our webinar last night, you can sign up for the replay as well. Ned, we will talk with you again soon.
All right, have fun.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.